What's going on? It's 𝐲𝐨𝐻𝐸𝐲, and welcome back to the No Flipping Excuses show. I've got an amazing guest that is going to be joining us today, and she's going to be sharing a ton, especially when it comes to funding. But before I do that, if you're brand new to the show, welcome. And make sure you hit that subscribe button if you're on our YouTube channel, or if you're watching this from your favorite podcast player, make sure you go ahead and click that subscribe button. And I'm sure after you're done listening to this, you're going to want to leave us a 5-star review. And if you're on YouTube, we'll continue the conversation below in the comments section. So you could drop us a comment well after we're done here, and we'll do our best to make sure that you get a prompt response. And make sure that you share this on all the socials as well. Facebook, Instagram, LinkedIn, all the goodies. Make sure you go ahead and spread the word. We want to make sure that we're sharing nothing but great content for you to enjoy and prosper from. So without further delay, I've got the COO of Fund&Grow, Miss Amanda Webster. How are you doing today, Amanda?
Hey guys, I'm great. Thank you so much for having me.
Absolutely. So excited that you're here. We've known each other now for what, 2-3 years, and
Yeah.
we've done a lot of things where you've helped a lot of our folks out with their funding and you've helped them grow. So Fund&Grow, here we are. And super excited that we're going to be able to share different funding tactics that people can use in their businesses today. I talk to clients that have been working with you guys now for a while, and you're helping them line up funding. But before we dive into that, Amanda, why don't you share a little bit about yourself? Let our folks know that are watching who's Amanda Webster and why should they be tuning into this episode to learn more about funding?
So as you said, my title, but that obviously doesn't describe who I am. I actually weirdly came from managing law firms for
Wow.
roughly 10 years. I was in the industry and legal for 17 years before I came here. But it's been an interesting journey. I'm an operational person. I'm like very process oriented, very rigid on that. But at the same time, I feel like the Fund&Grow culture has just been like, it was what I needed because in law firms, there's not a lot of culture going on. But I'm also a mom of 5, and I am married
Wow.
to a career military guy in the Army. So a lot of
Awesome.
different hats going on. But I
Yeah.
think all of them prepared me. I think parenting kind of prepared me because I feel like I have 50 children at the office and I love them, but they come with all the fun challenges that happens in the day-to-day at the office. But learning how to help entrepreneurs has been an amazing journey for me, and that's kind of become a driving passion that I now have probably forever, whether it's always with Fund&Grow or, somewhere else. But right now I have absolutely no plans of ever leaving this company. The CEO is amazing and I have such a support from him, and that it allows me to support the office, which, is just nothing but people trying to make sure our clients are successful.
Yeah, and I love that. You guys have been doing this now for a while. Ari, the founder of Fund&Grow, he's been at this for a while. I remember chatting with him, I think before you were with the company. So
Mhm.
I like that. I love it. You guys have a great Better Business Bureau review as well. And you guys actually do what you say you're going to do, which we're going to hop into here in just a moment. But why don't we kind of talk about why funding is so important, especially with entrepreneurs? I know most of our folks are real estate based, but with everything that's going on in the economy right now, can we kind of touch on that? Just I want to get your take on it because you work with a lot of entrepreneurs. What are we seeing in today's market from your standpoint? Are we seeing the opportunity like right now, like the market's trickling in so many different directions? We've got it's a presidential year. We've got inflation high, gas prices high. Everything you can think of is at an all-time high. So why don't we kind of touch on that? Like, why would funding be so important in a market like we're seeing right now?
So there's so many, it's like a perfect storm that happens to be going on over probably the next 6 months at a minimum.
Yeah.
Obviously, I watch a lot of funding trends in general, but it's the one thing, especially in real estate, is you don't want to miss a deal because you don't have the capital you need, right? So the statistic is over 80% of businesses fail due to capital constraints. So
Hmm.
having the funding lined up is essential. And I think that within the traditional way, within like a business line of credit or a business term loan, a lot of those are much harder to get right now. The interest rates
Yeah.
for them are not getting any lower at the moment. The points, the fees that go into it, and the criteria to get approved just keep high. I mean, we have partners because we don't do business traditional loans, but we have partners. And when I started doing that, it was like 2022, maybe we started like referring it over, and the monthly revenue you needed was only like 20 grand a month. I say only because that's relatively low. It's now at
Right.
least 40 grand a month in gross receipts you can show into your business bank account. So for a lot of people, that's just not something you consistently have. And so it just keeps getting raised and raised and raised. So the qualifications are going up, interest rates are going up, the amount that the banks are willing to lend is going down in those traditional ways. We're
Hmm.
also seeing that on the personal side, the uh, the amount of debt on credit cards is going up because they
Yeah, it
don't
is.
have any other options.
Right.
We're getting into higher and maybe potentially, I don't want to say 2008, but I'm just saying the higher default rates on auto loans and mortgages. Unfortunately, we didn't all learn from the past, apparently, and we're
No.
we're we're getting into some things. Um,
Right.
so it becomes one of these things. And if you're a business owner, one of the things that I see done every day wrong is they are using their personal credit cards and their personal credit to pay for
Mm.
their businesses, to pay for things. And that is a double-edged sword. And right now it's becoming even worse because if you have overutilized yourself on your personal and now you still need business capital and you don't have anything in place, you're in this weird little like black hole of things that you have to figure out. So we work every day to get through that, but that's kind of what I'm seeing is that the utilization on personal credit cards is getting worse
Mhm.
because the worst scenario I've ever seen is only 20% of business owners actually know what business credit is or how to utilize it properly, so they don't have it. They're just using their personal and destroying their personal credit in the meantime.
Yeah.
And then also let's not be, let's be real about it. If their business fails and they've put all of it on their personal, they've just they've just made a really bad storm for themselves. So it's
Yeah.
more about separating it all, getting the capital where it needs to be, stop using your personal stuff so that when something happens, you have that safety net on the personal side that's not being used by your business, and then vice versa. So it's a fun little area of education that I strive to give.
Yeah, it could be catastrophic for somebody if they're using all of their personal credit for all these different loans. And then yet, like you said, if the business goes out, now you're in a position where you might have to file for bankruptcy. And that's going to be a personal bankruptcy that's going to haunt you for the next 7 to 10 years. So it's going to cause some damage. So I like that you brought that up because a lot of people aren't aware of that. Like you were saying, like 20% of business owners. So I'm glad you brought that to light there. Let's hop into that then. What's the difference between then? I guess a lot of our folks are probably brand new if they haven't heard of Fund and Grow. So how does somebody get business credit established? How is that something that people can do?
So the beautiful thing about business credit is it's completely reported on the EIN side. So you do have to have an EIN. We suggest an LLC, and it can be brand new. That's the other beautiful thing. If you work and function out of a sole prop, that is also doable, but we just suggest that it be an LLC. So you don't have to have, 2 years in business, all these tax returns, bank statements, and all of that. You can actually get business credit on your EIN without any of that. So the difference being is that your personal credit cards are reporting to your three bureaus, and you're doing all the everyone's familiar with personal credit at this point in the
Right.
game. They know, some of these things, but what they probably don't know is that if you utilize over 35% of your available credit on your revolving personal cards, your credit score just starts to literally dive.
Yeah. Uh-huh.
And I'm talking sometimes 100 points for this.
Yep.
For some reason, that industry has decided to penalize you from using the credit that the lender said you were worthy of, which makes absolutely no sense.
No, it
But then on
doesn't.
the other side, they don't look at installment loans that way. Your mortgage, your car loan, personal loans, student loans, any of those, they're scored totally different on that spectrum. So you can have a car loan that you just got and it's maxed, right? Because you're all the way at the approval amount and they're not making your credit dive to that point. It obviously has a little bit of an effect initially because you have an inquiry and a new account. But your personal revolving cards, even your store cards, your Dillard's, your Macy's, your Target card, as all of us moms love to use, those are the same rules. So I'm a person, I don't put anything on my debit card. I don't use my
Right.
debit card for anything. So I put everything on credit cards. However, I pay them off like revolving, every single month I'm paying them off for two reasons. One is for fraud prevention, obviously, and securing the cash that's in my bank. But also there's a whole point game that I love to play and get my points for different things.
Oh,
Um,
yes.
but if I'm not careful with the timing, I can literally tank my credit score just by using those cards. Now,
Yes.
business, totally different set of rules. You get business credit cards, and these are high. We get people up to 250,000, sometimes more. So these are big limit cards that you can use for your business, reporting only on the EIN. So now your personal is good. And a lot of times, if you've been using your personal, we can now get that off there, right? Start pulling that off so that you can be separating it out, which your accountant, CPA, CFO, whoever is going to love because they don't like you to commingle anyway. But
Right.
you can use your business credit cards all the way up to the limit. So if you have a $50,000 Chase card, you can charge that bad boy up to $49,900 and your business credit is actually going to be super healthy. They're going to love it. They want to reward you for that. You get all these points, you pay it down, you do it again. You'll never see your business credit score drop because you're utilizing the funds that you were given. So there's this whole totally different world. I will disclose that on a business credit card, you do have to have a personal guarantee. That is the trade-off for not requiring all the bank statements and and tax returns and all these different pieces of paperwork that you have to have and having a seasoned business. This is kind of the trade-off. But with like two exceptions, which we don't use those banks, they will not report on your personal. They will not show up there. They're going to leverage the use you've had over your personal history to get you those lines. So
Yeah.
it is kind of a trade-off. You do have to have it, but at the same time, you're able to put yourself in the best position on both sides. And then, of course, have access to revolving capital that you're only paying back if you're using it. So if you're a real estate investor and you get $300,000 in business credit, you can use 100,000 and you're only paying back the 100,000. You go get a
Mhm.
business term loan. If you qualify, you're paying back installments from day one and
Yeah.
interest. We also specialize in 0% interest. That's one of the things that we've kind of learned over the years of how to utilize the intro offers for that too. So it's just completely different. It's not fair. The personal credit game is just absolutely horrible and it's made up. It's all made for us to fail, to be honest.
Yeah.
But we got to
Right.
play within the rules. So
I agree. I agree. And the main thing that I want people to take away from that is, well, there's obviously a lot, but the big thing is it doesn't it doesn't go on your personal your personal credit, which is huge. You could have different lines that you can be utilizing, like Amanda just said. So in today's market, it's such an opportune time. There's deals left and right that could be made, and the people that are winning, especially now, like you could do wholesaling, you can do contract flipping, and all that type of stuff. But a lot of the people, they see this as a long game, and they're the ones that have capital that they can play with. You need to be one of those individuals as well, especially what if you're wanting to do a rehab that can net you maybe 80 to 100 grand compared to a wholesale that would make you 10 to 15 grand. Big opportunity there. Big opportunity as well if you want to utilize the capital to maybe get your first Airbnb property and start having monthly cash flow coming in that way as well. So lots of big opportunities as far as from a funding standpoint that, I really wanted to bring Amanda on here. So if you're brand new or maybe a seasoned vet, doesn't matter. We can, you could go in and start utilizing the funding that's available for you right now, as long as you do it the right way. And we've got something in store for you here in just a little bit, so you can see what type of qualifications you can do for getting funding for yourself too. So stay tuned. We've got something really cool. It's free that you can check out to see what you can get qualified for, just from that standpoint. But if you do want to work with Fund&Grow, there's going to be a little bit of an investment, and I highly recommend that you do check it out, because it's well worth it, especially in today's market. Like Amanda said, we don't know how long this market is going to last. It might be 3 months, it might be 6 months, who knows? But right now, I can tell you today, the opportunity is here for you to take advantage of. So Amanda, continuing on with the conversation from a funding standpoint, who is the ideal person that can get qualified for up to 250 grand in business funding for whatever they want to do with the funds, right? But I would encourage people, if you're going to be utilizing Fund&Grow, I would highly encourage you, if you are going to get approved for up to 250 grand, as you start using it as best as you see fit in your business. But real estate right now is such a great opportunity. But I would love to hear your take on that too, Amanda.
Yeah, I mean, about 80% of our avatars in the real estate world in some way. I mean, obviously there's a lot of different types of real estate investors and things like that. But, being able to use it to create ROI is the key thing that I always tell clients. Like, this type of
Mm,
funding is a long game approach. It also is going to open gates as you use it more and keep developing it. But you need to be able to always have a plan to pay it back. These aren't grants, these aren't these things. But in the real estate sector specifically, right now, you have an inventory shortage happening all over the place,
yes.
right?
Yep.
So the number one thing that you need to remember as a real estate investor, no matter which way you're doing it, is you got to be able to jump on a deal the second that it's available.
Yep.
So we are able to teach our clients how to pull cash off of these cards without a cash advance fee to be able to fund real estate in all different ways. And I think
Mm,
that that's the number one holdup I get from people is they don't understand how they can use business credit in the real estate sector. And you
mm,
said Airbnb, which I thought was interesting
yeah.
because I recently had a client who's been an Airbnb person, has probably 10 properties in the portfolio, been in business for, I think, 3 years, should meet every checkbox for a traditional loan and are getting
Hmm.
denied.
Oh,
And they're getting denied because the lenders don't like the Airbnb model because they don't
mm,
feel it's stable, which I find
wow.
hilarious, by the way.
Yeah,
I'm like,
absolutely.
I think the hotel industry needs to be worried, not the
Yes.
Airbnb industry, because
Yes. Yeah.
I personally will never, unless I am forced to, stay in a hotel again. I will
Mm,
always find an Airbnb, a Vrbo, whatever. I am going to find that because for me and my family, or even for business trips, I have found that it's a better experience. It's usually actually less expensive overall,
yeah.
but I
Yep.
think it's the most stable. But it's crazy. But that's the problem with real estate is lenders for some reason don't like it because the market is never stable and it's never going to be stable. It's going to have
Right.
peaks and valleys and how high or how low can we go is kind of the game of it. Um, but our ideal client is really anybody. We just happen to live in the real estate world because it has limited funding options. 680 credit score on the personal side is a requirement, but I always tell people, if you have a 650, give us a call. Let's do the prequal. Let's see why. Because like I said earlier, if you're utilized, you actually could have 50 points we could find like that.
Yeah.
So don't let that scare you. Like you said earlier, do the prequal, figure that out. We're going to talk about that in a little bit, but figure out what your funding plan is. Cause even if you can't necessarily move forward today, at least you know when you can move forward and you have like a
Yep.
homework. Our team will give you the homework. There's no charge for that. We're going to give you the homework plan of what you need to do so that you can come back to us at that point. And sometimes we also have resources that we can say, hey, if you call these people, they might be able to actually help you with that one thing. Um, so a 680 credit score is what we require, but if you have, like I said, a 640 or 650, it's worth having the phone call and even maybe a little bit lower just to figure out what you have going on and why. We can actually,
Mm,
we get access to the bank level reporting. So it's raw data. So we can actually see what the lenders see, and we can tell you why they're denying you or why you're in that predicament. Don't trust the credit scores you're getting on Credit Karma or Credit Sesame or any of those ones out there,
yeah.
because they're all different Vantage models and they're always going to be different than a bank level. And you're not going to understand why, because they don't, unfortunately, it's not set up that way. The lenders want to keep those secrets. They don't want to tell you that. It's kind of the way it works.
Yeah.
So it's good to monitor though for just the purpose of identity and different pieces of that type of side, but don't trust
Mhm.
that credit score. So
Okay.
it can always be different. But yeah, it's really just let us take a look. We can typically form a funding plan for anybody.
Mm.
It's just that you may not have a funding plan that you can move forward on tomorrow.
Yeah, no, I like that. As long as you're getting the ball moving and it's rolling in the right direction, because like you said, you guys do have those resources. So if you need to have somebody go into a plan to get their credit increased, I would highly recommend and encourage it. From being in the mortgage business for as long as I was, like being able to maneuver things around on somebody's credit report and get that extra 50, 60 points, like you said, can be done relatively pretty fast. So I do highly recommend that you guys, if you might be teetering in that range from what Amanda just said from where you need to be, highly recommend that you at least check it out here in just a little bit.
Hey, go grab a copy of our brand new book. We'd love to put this in your hands. The Art of Flipping Deals. You could go grab your copy today at theflippingbook.com. Make sure you head on over to theflippingbook.com. We'd love to get this in your hands today and show you exactly how you could get free exclusive inbound leads in your business today. Make sure you head on over to theflippingbook.com. Take care. Bye.
To get a little creative here, Amanda, I wanted to throw this scenario at you because we do have a lot of people that ask us about Airbnb stuff.
Mhm.
So most of the time, like what I'm seeing right now from some of our hard money people that are wanting to do this, even some of our hedge fund connections, they're wanting to do a DSCR loan, but you have to put 15% down. So would we be able to use this business funding for that 15% that, you know, some of our lender connections are wanting to do? And for people that aren't familiar with DSCR loans, they're a no-brainer when it comes to doing Airbnb. I know you were talking about traditional banks just, well, actually, I take that back. The small mom and pop banks understand the Airbnb
Yes.
model.
Hmm.
It's the regional level and higher banks, the national level banks, I wouldn't even go to them. Because a lot of these small mom and pop banks, even hard money lenders and some of the hedge funds we're using, you might be seeing this too. So I'd love to get your take on it. They're using the air DNA data to look at what the bookings could be. And they're looking at it from an occupancy rate too, because it's pulling all of the data from Airbnb and Vrbo and all that type of stuff so that they can calculate what the DSCR is going to be. So would we be able to use that 15% possibly coming from the lines of credit that you would be helping us put together? And what's your take on some of that stuff by utilizing a DSCR loan and the business funding?
Yeah, those are relatively newer coming in as far as like my knowledge of them. However, I look at them the same as I did even the commercial real estate loans that people were buying for the properties
Yeah,
they were holding for just general rental, tenant occupancy side.
yep,
Yes. So the answer is absolutely. And you
cool.
can, there's a third party service, which we provide options. There's more than one. And you're able to pull the money and wire transfer it to the closing agent, however you're using it. Um, because hopefully you're still in your 0%, because then it makes it really fun. So
Yeah,
0% credit card. So you have time to figure out the payment. Plus, if it's 15%, it hopefully isn't a huge amount of money. There's a small fee, but it's going to be far less than any points that you would see anywhere else. I think the average is like 2.9% for that
mm,
pull, just of what you pull. And they will literally take it from your credit card, send it over by ACH, wire transfer to your closing agent. You just got to provide some kind of closing statement, something for that company. And it looks like a regular purchase on the credit side.
that's
They don't have
awesome.
any care in the world. I will caution you though.
Mm,
Amex is my number one I will caution people on. Amex only works with one of these types of fund people. And if you use your Amex on another third-party service that doesn't allow it, they will actually shut your card down, or they might even shut the transaction down first, but you potentially can lose the card by trying to do it because Amex doesn't like it. Yet they've partnered with one of the biggest names in the game for this type. So again, it's just like a business model. I'm sure there's some arrangement of why that's set up like that. But we educate our clients on that to make sure that they know exactly which cards they can use for different services, what services are available. I always compare it to like Milio for the personal side. Milio doesn't work for the business side, but there's companies like that on the business side. And they're not small companies. This is big business for them because they're getting, 2.9% for a deal that takes them, I don't know, 20 minutes to process and be done with. And they have zero risk factor because you can't charge back on it. So they have no risk in the world on that. But you can use it for the down payment. We've had people purchase entire properties on it. I have a lot of BRRRR people who use this to be able to front side that, to be able to get to that refinance point, because, and you and I both know that refinancing a property you already own is far easier than purchasing a new property. So that's a temporary housing method that we've learned over the years. No matter what state we're in, it's just always easier if you already own the property. So that's why the BRRRR method actually works pretty well with our model. As far as the Airbnb, I absolutely love data. I'm a data-driven person. So I love that they've developed a way to almost like provide an appraisal and like projections in the Airbnb space. And actually, it's pretty easy to do. They're just going to look at, just like they would do an appraisal, they're going to look at the market around it. What are they getting for a property very similar? What are the occupancy looks like? How often is that property rented out, on a weekly basis, on a weekend basis, whatever. And the Airbnb model, to make it profitable, is fairly easy because of the rates that are out there. So I just love that they're doing it because it's providing a type of funding that you can't really get a lot of other places because people just aren't doing it. Might be able to do it if your Airbnb is again, a lot of properties might be more than 250,000. So I'm not saying that this is a method you can close completely on all the properties, but if you could, it's again, just like the BRRRR, you could buy it and refinance it once you own it because it's a little bit easier. But yeah, it's amazing. I'm glad that they're doing it because Airbnb is probably one of the more stable real estate models nowadays. But big lenders don't like them.
No,
I don't know why.
no. Yeah, I can't put my finger on it either, but you brought up a really great point there, which I think a lot of people may have glossed over because we're throwing out some terms. So just to let you know, DSCR stands for debt service coverage ratio, just in case you wanted to know that. We'll have some more in the show notes below. But the big thing that I want you guys to take away there from what Amanda just said is, let's just say you do get a deal and you get, let's just say 85% of a loan, you put 15% down using the business funding that you had used through Amanda. I would highly recommend you do that because she brought up some really great points there as well on making sure that you're using and utilizing the right card for that so that the card doesn't get shut down and you have to pay whatever the balance is, because that wouldn't be fun. But let's just say you do that. Now you're at 100%. And if you go back in like 3 to 6 months, you could do the BRRRR and you could refinance, pay off your business funding, and you could possibly even pull some cash out of that deal, which is tax-free, by the way, if you do a refinance. So now you have that card and you possibly have some cash that you could invest. So you have the money from the funding that you just paid back. And now you have some potential tax-free money that you could start investing into more properties, or you could possibly go back to Fund&Grow here and see if they could get you additional funding for some of your other projects. So lots of great things there. I hope you guys are understanding that it doesn't take a bunch of money to get involved with real estate, especially moreover that you could start creating the monthly cash flow that you want, not in 6 months, not a year, not even like 3 or 4 years. Because a lot of people that when they get into this, like, oh, I need all this money. We just told you exactly what you need to do for 0% down. 0% down, you could get your first Airbnb. I'd rather have an Airbnb rather than a traditional rental because I don't want to get completely trashed by tenants. So Amanda just gave you the blueprint for what you need to do for doing it. Right now is a great time for getting these properties too, because nobody can afford them with some of the interest rates that are going out there, but you can, because BSCR loans are going to be substantially lower from an interest rate standpoint than if you're going traditional mom and pop style with some of these bigger banks. So, man, we're sharing some golden nuggets on today's show, and I'm sure some people are chomping at the bit to know how they can work with you. We're going to have something pop up here that's going to let you know exactly how to do that, but you can go to fundandgrow.com/Jason PQ. That stands for pre-qualified, just in case, so you know that. So again, fundandgrow.com/JASONPQ. So go ahead, check that out. You can get pre-qualified. Amanda and her team will be able to get in contact with you, let you know what you can get qualified for, which is exciting. It's exciting.
Yeah.
You're just getting on here and you're doing this. Again, we've been working with Fund and Grow now for years. We highly recommend them to so many of our clients because a lot of you are just getting started and you need that capital. So we'd love for you to do that. But Amanda, I know we're getting here. We've got a few minutes left. I've got some other questions that I'd like to ask you, but is there anything else when people go over that pre-qualification page, I know it's a mouthful, that they should be aware of, or anything that you think they should know when they're heading over there?
So don't worry about what the secondary page says, because some people who are ready to go are going to be told that, and they're actually able to sign up straight from that link. And you can, but if you don't get that, don't worry. My team's going to reach out and we're going to tell you why. And sometimes the why is so simple and stupid. It could be something as simple as you actually have your credit reports locked, so I can't pull it. So don't worry about that. It doesn't mean you're denied. Just be expecting the phone call. And we also have an agent who does text messaging. So her name's Kelly. If you get a text from Kelly, she can help you get an appointment booked so it's convenient for you. All that's going to kind of happen in a quick period of time. But don't worry about what that follow-up page says. If it does give you you pre-qualified, sign up here, you can move forward. But I usually suggest you actually talk to our team so you know exactly what that looks like.
Okay. I like that. And I'll tell you guys right now, from working with Amanda and her team over at Fund and Grow, the communication experience is phenomenal. They make sure that they take care of you promptly. So make sure you head on over there, fundandgrow.com/Jason PQ. They will take care of you, my friend. So Amanda, as people are heading over, they're still listening to this video, or if they're listening to it as a podcast. So hopefully if you're listening to this as a podcast in your car and you're still driving, don't go to the website yet. Go in just a little bit. We don't want you getting into an accident. But what I always like to ask our folks that come on here is, I always like to try and find out what type of books they're reading. So is there any books that you've recently read, not children's books, because I know you have 5 kids, and we could all go and talk about, was it Brown Bear, Brown Bear? We could do that one left and right. But do you have any good, maybe, like, it doesn't have to necessarily be a business book, like it could be an inspirational book, a motivational book, whatever it is. Do you have like maybe 1 or 2 that you would recommend?
What's funny is it's kind of both. It's a motivational plus like leadership.
Okay.
But it's I can't think of the name of the author, but it'll come to me at some point. But basically it's the power of a positive team. And so it takes an interesting approach. He's the same author who made The Energy Bus, which was a huge book that talked about positive energy in the team as well, but it was just a different aspect of it. Because our culture here is very centered around law of attraction and putting positive out and always looking at everything from a point of love. And if you do that, it will always come out as a good response. You know, when I'm coaching employees, I don't coach them in a traditional sense. I'm very different in my approach. And I think it's helped humanize me. I'm not just in an office and I have this big title. I walk around the office constantly. I'm always engaging with the staff, but that way I'm building relationships. I know everyone's names. I know if they're married. I know if they have kids. I know, if they have a significant other, usually I know who they are in some aspect. And it's a way to just drive a positive environment. So that's a book that I actually am about halfway through. And funny
Okay.
enough, I recently read Who Moved My Cheese to my kids to
Oh,
see what
that's
they
a
would
good one.
interpret
Yeah.
that book as, because I read it as a college student a long time ago and did a report on it. And it's probably one of my favorite ones because it has so many things that you can learn within it. And I even learned something new. It's such a short, easy book, but it's
It
very
is.
interesting about growth and change and being able to adapt. And it was something I thought was interesting with my preteens and my teenage daughter,
Yeah.
reading it to them and seeing what they got. And they did. They had some insightful things to say, which I thought was great. So I recently reread that to my kids.
That's awesome. That's awesome. Since you brought up the kids, um, we recently had an event not long ago, and I had my sons, they're 16 and 14. I had them read, I'm not sure if you heard of the book, The Gap and the Gain, but
Yes.
same premise. Like I always try and have them get from the gap to what's the gain? What did you gain from that so that you can no longer be like, oh, poor me, poor me. No, what can you learn from it? Because there's an experience from everything. And it's a great book. And I had them read it and had them do presentations in front of our live people that came. And they knocked it out of the park. I'll tell you, like kids can do some amazing things in life. And I'm glad you're having them get started on those books as well. Cause I love that book. I remember that's a book that I started reading when I was first getting into management years and years ago.
Yeah.
So great stuff. Glad that you're sharing. And we'll put those books in the show notes as well, along with the link that you can go to check out Amanda and her great company, Fund and Grow. Go on to fundandgrow.com/Jason PQ. Would love to see how much you can get pre-qualified for. And maybe, heck, maybe you might be talking to us later on about some of the Airbnb opportunities that you can get into as well, or some fix and flips as well. But other than that, Amanda, we're getting to that time here. Is there anything else that you would like for our folks to know that are watching this?
I would say two things that a lot of people know in the personal and don't realize it's even bigger in the business is, like I said earlier, I never use my debit card. I also would never use a business bank credit, like one attached to your business bank account for anything, because it has the same interesting fraud issues that you would have on the personal debit side. And the second
Yep.
one is you need to earn money while you're spending your money. So the
Yep.
point and rewards game on the business side is huge.
Yep.
I put everything possible on the Fund and Grow business credit cards because it will turn into, and some of them cash, depends on the card, but some of them turn into cash. I travel a lot for the company. So airline miles, upgrades,
Yep.
Marriott Bonvoy, there's like a way you can double dip some points.
Yep.
So the point game, you're going to spend the money anyways. So why not be able to earn money? So even if you're just going to
Yep.
use it for overhead or marketing, don't use your business bank account for it. Use your credit card. You're keeping yourself cash rich on the business side. Everybody leverages debt in business if they're doing it correctly. So this is just another form of debt leveraging that can actually earn you money. Just saying.
Yep. I love it. Like, so Amanda just gave you guys a hack right there for, I would highly recommend with what she just said, getting the cards that are like, say for instance, you love travel, get a Delta card. And like she said, Marriott Bonvoy, there's so many different resorts that you can stay at that you can get those points back. Like right now, there's something that I'm going to be planning for and I'm using the points for. It would have probably cost $15,000-$20,000 with airfare, hotel, all that stuff. It's taken care of from the cards. It's
Yep.
taken care of from the cards. So that saved me almost $20,000 as a business owner. That's a huge amount of money. That's a lot of payroll right there, especially if you're building out your team. So highly recommend it. Amanda's shared a ton of wisdom, ton of nuggets on here for you guys to take advantage of. Make sure you do yourself a favor and go get pre-qualified today by going to fundandgrow.com/Jason PQ. But other than that, Amanda, I am full of gratitude. I'm so thankful that you were able to hop on and join me today. I know you've got a busy schedule, so I'm so thankful that you're able to do that. So appreciate you being here, Amanda.
Very welcome. Thank you. And I'll always be available for you.
Thank you so much, Amanda. For everybody, make sure you drop a comment below. What was the big takeaway that you enjoyed so much from today's episode with Amanda Webster? And let's continue that conversation below in the comment section. Make sure you give this video a thumbs up. If you're listening to it on your favorite podcast recording, make sure you give this. This definitely earned a 5-star. Amanda truly crushed it. She knocked it out of the park. And if you do not take advantage of everything that she shared today, that's on you, my friend, because she shared with you exactly how to go get your first property that's going to cash flow for you with zero down, 0% out of your pocket. And we can help you with that too on our end, the No Flipping Excuses team. Make sure you subscribe as well to our YouTube channel. And if you're listening to this on your podcast recording, make sure you subscribe as well. But other than that, so thankful for you guys. Have an amazing rest of your day. Go out there, make it happen. Take care. Bye now.
Hey, book your free strategy session call today by going to 2daycall.com. That's the number 2daycall.com. We'd love to talk to you about how we're tapping into 34 plus lead generation off-market strategies in your market. Most of them too are free. Let's talk about it. Let's see how we can help you and your business thrive right now. Head on over to 2daycall.com. Talk to you later. Bye.